interviews with folks along the way. And today, one of the founders of Blockchain North, Florent, also known as Flo Thévenin, is going to lead a discussion with Sebastian Bea, who's the Chief Investment Officer of ReserveOne. They're going to have a discussion around diversified digital asset treasuries. So please join me in welcoming them to the stage.
Hello, Boston. How's everyone doing? Good? Can we give a shout out to the organizers for such a cool event here in Boston? Yes. Well deserved, I'd say. So my name is Florent Thévenin. I'm the founder and CEO of Blockchain North and BN Creatives. We are Canada's media and marketing champions for the digital asset space. You might have seen our booth outside. Come and say hi if you haven't already. I'm really excited to be back in Boston. Last time I came was at the end of November, and it was colder than in Montreal, where I'm based. So it's been a real pleasure to be here this time at the end of the summer. So today I'm going to be moderating a fireside chat and Q&A, so we'll leave a little bit of time during these 30 minutes to ask questions if you have them. The topic is inside a diversified digital asset treasury. Obviously a big trend right now in the crypto space, so very unique opportunity to hear directly from one of the builders of such a DAT, as you call them, or DAT. Today, his name is Sebastian Bea, right next to me. He's the CIO of ReserveOne. I'll let him introduce the company to you in a moment, but quick introduction to Sebastian himself. A lot of experience. He draws on leadership roles at Coinbase Asset Management, One River Digital, as well as BlackRock, so both TradFi and DeFi. And also, he was an Olympian rower. The first thing I told him when I saw him is I didn't realize how tall he was. Otherwise, I would have worn heels today, maybe. Luckily, we're sitting down, so no problem. Yeah, so anyway, let's get started right away, Sebastian. Welcome to you. Welcome to Boston. Why don't you help us set the stage a little bit? What's the broader macro context during which we're having this conversation right now? I'm thinking about so many things, but I'm going to let you run with your own perception right now.
Sure. The macro context for crypto is really as powerful as it's ever been. And let me explain that to be precise. So at the high level, we're likely to see two major factors come together at the same time that could probably drive one of the most interesting market cycles we've seen in crypto to date. What I mean by that specifically is that we are in front of probably a rate cutting cycle here in the US. We'll talk about that more in a bit. And we're in the midst of first-time legislation and regulation for crypto. Both of these things happening in the same quarter, potentially, is something we've just never seen. And in my investment history, you learn lessons. The best lessons are learned the hard way. Someone tells you did something wrong, and you learn from it. And my best example of that is when I learned to look for something that I'd never seen before. I'd been pitching a guy named John Burbank who ran a hedge fund called Passport. That's dating me. But they were famous because they would go all around the world looking for things that they had never seen before. And I said, hey, I was at CS at the time, and I said, John, why don't we do enough business? Why don't we do more business with you? And he said, Sebastian, you've never shown me something I've never seen before. Show me something that you've never seen before, and maybe you can be in our top 4. So we went back. Grabbed the thematic team, and eventually we earned that right. So I think about right now where we are in September, right? The FOMC, or the Federal Open Market Committee, is meeting on the 16th and 17th of this month. They are going to, the market is already pricing a 25 basis point cut, and that was before what happened yesterday, right? What had happened yesterday? Well, it turns out there's about 1 million jobs that didn't happen last year, give or take, based on the BLS revisions. So if the Fed is indeed data dependent, well, it turns out that this economy has not been as good as we thought it was for jobs. And then perhaps rates are too high and restrictive, and they're actually hurting one of the key variables that the Fed is targeting. So that's one of the key, to be a little bit long-winded, that's one of the key things that's happening right now. Now, put next to that what's also happening on the regulatory side for crypto. The reason we didn't have regulatory clarity is we didn't have legislation. People forget that in general, if you have something new, you need to write a law first before the regulators can write rules. So when crypto was complaining about not having good regulation or clear regulation, What we were actually also saying is we don't have laws. And if regulators don't have laws, it's really tough for them to write rules. So now what do we have? We have Genius, which is now the law of the land. We now have legal programmable money, rules are coming. And now Clarity, which is the market structure bill, that's currently in the Senate, slowing down a little bit. But you know, even yesterday, the Democrats wrote a well-written 6-page document basically stating where they think things need to go, which means we actually have bipartisan action to get Clarity done. So you back up and look at the macro context, and we have to recognize that we are seeing two really big important things for crypto happening at the same time. We're likely entering a rate cutting cycle, right? And at the same time, we're likely to be sealing a very positive legislative and regulatory perimeter, or not perimeter, but framework for the digital asset space. And both of these things are happening at the same time. And that is something we've never seen before. And that's why we all have to pay attention.
And of course, there's a lot more happening than that, but that's a great introduction. So in that context, could you maybe define for us what a digital asset treasury is, considering we have other investment vehicles like ETFs, for example? So why do we need DATs or DATs?
Sure. And raise your hand if you've worked in ETFs. Anybody? Okay, I'll raise my hand too. I worked in iShares, very good. Okay. ETFs are fantastic vehicles, right? And they're well regulated, but they also come with constraints. And so the view, very simply, is that an ETF is great, but in most cases, a DAT can be better. A digital asset treasury can be better. Why? Because principally the flexibility that you get in a permanent capital vehicle, as opposed to an ETF, which is essentially a vehicle that demands liquidity on an on-demand basis. You know, IBIT is a phenomenal product, but Bitcoin is coming and going every day, right? If you want to take your Ethereum and deploy it and do other things beyond just staking, it's going to be very difficult to do that ever in an ETF. If you want to engage with DeFi, which still is difficult today as an institutional player, but the SEC is telling you to try, that's going to be very difficult or impossible to do in ETFs. Digital asset treasuries are companies that have what we believe to be the optimal setup to get the most out of digital assets if you want to be invested for the long term. And our suggestion is that you do.
And so who is your target market specifically as a company? And we'll talk about your company specifically too.
Sure. Look, I think for us in particular, what we're finding as we're building our business, and we're in the midst of, we've announced our business combination, so we're expected to list in Q4 on NASDAQ under the ticker RONE for about $1 billion. But we look at the mix of what we're doing between a diversified allocation, activating the assets, and also an opportunity to invest in VC. We're really a good fit for high net worth individuals and advisors who are looking for a one-stop shop for their clients, where they just want to get the big cap liquid assets in a market cap basis with the right sort of activation and VC where it makes sense. That's for us. Other DATs are going in a different direction, maybe deeper in a particular asset, and I think there's definitely a time and place for that as well. Yeah. But if you look at the structure of particularly the U.S. equity, the U.S. Investor market, it's heavily intermediated. We have, the advisor network is a big driver of how capital gets to the market. And in general, advisors really want their clients to be diversified. So that's what we're doing.
One of the unique characteristics of ReserveOne is that you've chosen to be a diversified asset treasury. Can you tell us why, what's the thesis, and perhaps talk a bit about the dominance between Bitcoin and altcoins from your point of view?
Sure. Well, some of the background actually comes from the creation of the idea. Let's see. Raise your hand if you know who Wilbur Ross is. Yeah. Okay. There you go. All right. So Wilbur Ross is expected to be on our board as a vice chair, and the backer of our group is a gentleman named Chin Chu, who was a former head of private equity at Blackstone. True American story. Came here as a refugee when he was 11 and turned himself into a multi-billionaire. But Chin and Wilbur in particular were talking and said, look, the time is now to get into crypto, and that's how Jamie Leverton and I got involved, because there was an idea to do something more institutional, more diversified. It really reflected who we were, right? What we wanted to do, what we thought the gap in the market was. And we think the time is right for this now. Maybe it was a little early 6 months ago. But if you look at the market cycle that we're in, Bitcoin dominance topped out very recently around 60%, right? We've had like a 5-year bull run in Bitcoin dominance, give or take. And now Bitcoin dominance is starting to come under pressure, right? Does that mean I'm bullish or bearish on Bitcoin? Like, absolutely not. My long-term forecast for Bitcoin is somewhere between 850K and $1 million. And this cycle, I think it can easily be 250K. And I'm really conservative, and I think that those are easy numbers to get to, and I can walk you through if you'd like. But I'm even more bullish on what I think is likely to happen for Ethereum and Solana in particular. Because what did I just walk through earlier in the macro context? We're still waiting for clarity to get passed. We're still waiting for clarity on how we can or can't use DeFi, right? There are big unanswered questions that are going to get answered one way or the other. And then after that, they're likely to unlock demand for these networks that doesn't exist right now. Like, imagine you use Amazon, right? And all of us do, one way or the other. But imagine you wanted to buy some Amazon web credits, in advance. And then one day the SEC comes in and says, actually, that web credit is an unregistered security, and you can't use that asset to access that network. Well, then you felt like Polygon, right? Because Polygon goes, so I think it was like weeks after Starbucks announced their next generation, loyalty platform was going to be on Polygon, and then the SEC comes in and says, yeah, that's an illegal security, right? Well, what corporate in the U.S. was going to build on any of these blockchain networks with the SEC taking that sort of stance? The answer is basically no one. So what does that mean for demand for block space on these networks? Well, basically zero, right? So now we're undoing that, and we're undoing that at like an incredibly rapid pace. So as much as the blockchain fundamentals are in many ways still not that great today, if you look at like what transaction fees actually are on Ethereum or Solana in particular, we are in front of the unlocking of these networks actually being useful, right? So then you bring it back to our portfolio context. Yeah, I want to be long that, right? And I think our investors will want to be long that. And I think it's not complex to say that you should be long Bitcoin because of various macro reasons, but you should also be long things like Solana, like Ethereum, like even Cardano. Underappreciated, and it's in the self-help mode. If they really, there's a lot of things that could go right that maybe aren't priced in. So, which is to say, nobody has a crystal ball, and that's why in general in our regular portfolios we're diversified. So why not here?
Nobody has a crystal ball, but it's great to get 2 price predictions without even asking for them, so that's awesome. And you mentioned Ethereum and Solana, and for those who don't know, Friday and Saturday, there's ETH Boston and Solana Boston, I forget in which order. We're gonna take questions very shortly. I do wanna ask maybe a bit of a personal question. So you have a background in TradFi before moving to Coinbase Asset Management, and you're also an Olympic rower. I said to him in our prep, I said, oh, you're a former Olympian rower. He was like, once an Olympian, always an Olympian. But that's a unique experience.
Except for Lance. If you get caught for drug testing, you're a former Olympian. Sorry.
Except for Lance. What do you draw from your experience in either TradFi or in sports, basically, to build something that is obviously quite difficult to build in a context that's fast-moving with a lot of macro context to take into action as well?
I think the Olympic experience was useful because it's similar in the sense that, look, it's really stressful right now. If you're trying to build one of these businesses, as we are right now, you're looking at a capital markets environment where there's been 200 of these companies floated over the last 6 months or something like that. That doesn't sound like that's necessary strictly for capital formation. So we have I think this is a period where you have to say, well, why should we succeed, right? There's a lot of competition. Sounds pretty hard.
Why should you?
Yeah, right. Well, and if you obsess over that, you can really find yourself in a tough place. you know, my path to the Olympics and to the medal stand was really difficult. Like, I literally got carried off a plane because I had a back spasm when we arrived in Sydney, and I didn't even think I was going to compete. We're doing better than that here.
No
But
back spasms right now?
no, I'm fine. Don't ask me to row though. No, look, I think there's a lot of competition, but the lesson I took away from rowing was you have to stay in your own boat and really work well with your team, even when you're under a lot of stress. I haven't been perfect in the last month or so. It's been real tough. But that experience definitely helps me every day to just, you know, pick up the oar, get back in the boat, keep pulling, and every day we end up a little further down the course.
Yeah, and keep breathing, I suppose. That's probably a big part of rowing as well. We're at the halfway mark, and I'm just wondering if there are already any questions, because ultimately this is all about, look at that. Sir.
Thanks. You know, Sebastian, you said, thank you very much, by the way. You said that there were 200 of these companies, roughly, that are out there. Do you expect to trade at a premium to the portfolio value? And also, do you expect to be able to make sufficient revenue to cover your operating costs from DeFi, from staking, from all of these other things?
Sure. I think what the market will do is the market will price companies at a premium if they're able to generate a positive expected return on their assets. That's definitely the expectation that we are going after with our business. In the period when we were marketing our transaction, we talked, and this is also in the materials, that we do intend to activate our assets to seek excess return, and so we're seeking to generate a positive return after fees, and costs in our business. Do I think that a lot of these businesses will start to trade at a discount to NAV? Well, actually, a lot of them already are. And is that going to draw some difficult questions? Absolutely. We've already stated that we expect that there will likely be consolidation in this space, and we welcome that. In the end, if you look at, and I just actually was at the HCW conference where Michael Saylor made a presentation. I think may have been a webcast. It was really well done. He's trying to deliver a very specific thing, and we're not trying to compete with that, right? So think of it this way. He is trying to enhance the equity return with leverage through the various vehicles. Our goal is to generate excess returns to the equity by deploying the assets directly, right? So it's a different approach, and I'm actually personally comfortable with his approach in some ways. I'm also comfortable with my approach. I think either of those approaches can demand a premium to NAV. I think some of the things that drove a premium to NAV in the past are starting to dissipate, right? One, we had all sorts of impediments that, you know, some are still there, but some are going away. And so I think that in general, you're going to see a compression of some of these extreme premiums to NAV that don't make a lot of sense. I think good businesses in general should be able to trade a slight premium to NAV, just like good banks can trade a slight premium to their book.
There were a few more questions, so I'm going to go to the left there. Yes, sir.
Along the lines of Michael Saylor and what he did at Strategy, would you call them kind of a digital asset treasury company at this point? Have they come into this space sort of a different way than others because of the start that they got? And do you think other companies might start to follow the process of becoming sort of a digital asset treasury or having subsidiaries that do that as well to add value?
So MicroStrategy actually wasn't the first. The first was arguably Hut 8, because it was Jamie Leverton, who is my CEO. She was at Hut 8 when I was at Coinbase, and we're the reason that Coinbase made its first ever loan to a miner. But that's okay. That's okay. It's not well known. But Hut 8 was the first company actually to say, well, that we're going to buy Bitcoin, in this case mine Bitcoin, but we're going to keep it on our balance sheet. We're not going to sell it. And so they were the first company to come up with a HODL strategy, which is what Michael Saylor is doing. Michael Saylor, strategy is what strategy is. Subsequently, the industry has come up with this term digital asset treasuries. I mean, strategy. Is it a digital asset treasury? I think so, right? But are they doing it in a slightly different way than others are probably going to do it? Yes, right? Other question, do we think other companies are going to hold digital assets? Yeah, I mean, look, it's a well-known and unfortunate reality that many companies have actually held Bitcoin for quite some time, because if you were a hospital chain, right, you had a Coinbase account for all the wrong reasons, because you were afraid of getting ransomed, right? That's not a great entry into the product. Will more do it? We'll see. I think I think we're going to see more companies embrace Bitcoin when its usage in the economy changes. Right now, it is only being treated in the U.S. as a store of value and not a currency because of tax law, right? Actually, I don't know if you know this, but if you have $200 worth of pounds and you use it, that's not taxable today, right? And it's up to a certain amount. We actually have a provision that says if you use your foreign currency and it's appreciated, you don't have there's a bar under which it's not a taxable event. Senator Lummis in early July put forward a bill that said, hey, if you use your Bitcoin for small dollar transactions and it is under $300 on an individual transaction and cumulatively under $5,000 for the year, it's not a capital gains event. This is a huge deal. And it's a long answer to your question, but it's really important. Nobody's going to be using Bitcoin as a currency, generally speaking, and major economies, G7, et cetera, until we change tax law, right? Are we going to change tax law? I don't know. I think it's going to be tough. So then ultimately the driver of that behavior of some corporates putting Bitcoin on the balance sheet is just a view that they are concerned about debt, fiscal restraint, lack thereof, inflation policies, and they just want to own some Bitcoin because they think it'll probably perform well relative to their other treasury assets.
I think we had another question there. This is great, by the way. Thank you for doing my job.
So you had mentioned 250K for BTC, right?
Yes.
And we're currently at a $4 trillion market cap. So what do you suspect the total market cap will be if we were to hit 250K?
I don't think it's a 4 trillion. Can I phone a friend? 2 trillion? Yeah.
No, 4 trillion total market cap.
Total market cap.
Yeah.
Yes. Okay,
so
fine.
if we have 50% BTC dominance,
Yeah.
are we looking at a possible Q1, Q2 of 2026 for an extension because of the times ticking? And
What do you mean? I'm sorry, I'm missing the question. The question is about timing of where we get, when we achieve my hopeful level in this cycle?
Yeah, because we typically have the 4-year cycles, and we usually have blow-off tops between Q3 or Q4 of this year. But because everything seems
Well, I don't make forecasts, but I did post on Twitter today to remind all of you that October in crypto is called Uptober, because in the last 10 years, Bitcoin has averaged over a 22% return in October. I still think we're in a bull run. I'll get to your question. I still think we're in a bull run, but I think that especially right now, I'm pretty bullish short term because we got the Fed in front of us. We've got seasonality right after it. I think we could start to think about approaching some of these targets really fast. Tom Lee was talking about getting Bitcoin to 200,000 by the end of the year. I don't think that that's outrageous, because just to back up, look, we're playing around in a space that's really important, but really small still today, right? The global capital markets are massive, and they have a lot of behaviors that some of us know well, which is if it's up, it probably goes up till the end of the year. And we have a good year now for equities. We are starting to price in the beginning of a rate cutting cycle. Tech is starting to move really fast, even today. What does that mean for things like Bitcoin? It's likely that we could see a huge run in Bitcoin over the next 6 to 12 months. Now, is it Q1 or Q2? I don't know. I think that this famous last words, but this cycle is different, right? And it's different because of, like the happening is really not as material as it used to be. Like, it used to be a huge change in like how much Bitcoin was coming to market. Like, it doesn't matter in comparison to like Fidelity and BlackRock iShares ETF flows, right? And it doesn't. I don't think it's really going to matter in comparison to some of these big regulatory changes that are coming.
We only have 5 minutes left, so I'm going to reclaim my role just for a moment. And I want to ask you maybe a couple of quick-fired questions, still talking about the future here. So the first one is tongue-in-cheek, I got to warn, and we didn't really prepare that one.
That's all right, let's go.
It just came to my mind yesterday. What's going to happen first in the United States? the collapse of an ETF, a crypto ETF, of course, or a federal CBDC?
Well, there will never be a federal CBDC, so that's easy. And
Okay, so how does the ETF collapse
yeah, so
play out?
let me talk about the CBDC. The Republicans don't want it. They're going to fight it tooth and nail. Some Democrats think they want it. Many Democrats do not want it. And both of those opinions don't matter that much because we really can't get anything done like that, okay? Number one. Here's another reason why the CBDC is not going to happen, because our regulators love our banking oligopoly, right? Why? Because just like the Canadians like it, just like the Australians like it, because they can basically get 5 to 8 people in a room and say, I'm mad about this, fix it, right? And they can do that in Canada, they can do that in the US, and they can do that in Australia, and that starts to blow apart with the CBDC, and let me explain why. So right now, the way the way the U.S. money system works, right, is you have the Fed, and and then you have the commercial banks, right, and we have depositors, right? Well, so depositors put their money in the banks, at least for now. Stablecoins could blow this all up, but if we were to create a CBDC, would you rather hold your money at J.P. Morgan, who pays you nothing, or hold your money literally at the Fed, where there's zero counterparty risk? Well, like in every sort of market crisis, then money would just flow out of Bank of America, Wells, JP Morgan, straight to the Fed. And what is the impact of that for the economy? It's a credit crunch, right? And why? Because the banks are using those deposits to fund loans. And if all the money's now flowing out of the banks up to the Fed, right? Well, then we're just going to have a credit crunch at the worst time. So this is why a CBDC is never going to happen.
Just because to keep the time?
CBDC would literally blow up how we presently create credit in our economy.
Yeah. Just quickly, an ETF collapse, how would that play out in 30 seconds?
I don't see how ETFs are so boring and they work so well. I mean, the ETFs that have collapsed that in the current TradFi market have generally been around bad construction with volatility, right? There was I think Credit Suisse had an ETN around short vol, and that blew up, actually, right? It's hard to see look, someone will do something too creative, but generally speaking, things blow up when there's too much debt, too much leverage, and so it's some sort of silly levered product. But in general, I think that the crypto systems have shown that they're a bit more resilient to engaging with leverage with high volatile assets. If you look at how Aave has performed versus or Maker versus banks, I mean, there's no comparison under stress.
Another cheeky one, and then we'll wrap up. Who's more powerful in the world today, Elon Musk or Satoshi Nakamoto?
They're not the same person, right?
That was a follow-up question, or are they one and the same?
Look, ideas are very powerful, right? Ideas are super powerful.
Elon does have ideas.
And and Elon has some pretty powerful ideas. But I would argue Satoshi's probably more powerful than Elon in the sense that the core principle of Bitcoin is to separate money from state. And, Elon still works for the government, pretty much, right? And so he's trying to make things better for this government and this country, and I think he should be applauded for it in general. He's not without controversy, but it's a more powerful statement to say, I would like to remove the ability of a state to control the money. Because when you do that, you deeply erode the ability of a country to wage war, right? You can't print bonds to send bombs. And I think in the end, that's a more powerful idea, and something that I think could create a lot of peace and change.
We have 1 minute left. Any final thoughts to share with our audience today? Any other future predictions or high conviction thoughts to share with our audience today, especially if they're maybe somewhat contrarian to the public narrative right now?
Well, I talked about it on our video. I don't know if it came out, but I think what's happening in stablecoins is actually one of the most interesting things we've ever seen in any financial market segment. I mean, stablecoins on the negative could disrupt the banking system, and we could have a credit crisis next year, easily. Why? Because why would you hold your money at JP Morgan getting 0% if you can take your money, put it in USDC, regulated, 100% reserved, and Coinbase is going to pay you somewhere between 1% to 4%? Like, it's safer, it's better, and it pays you more. Why would you have your money in a bank? No one has a good answer for that. Everyone's going to be asking themselves that question. So I think stablecoins are really important on that note. And I think the other thing is, you know, if you go back to the internet, we had like AOL and Prodigy and Minitel in France, and then we had the internet, right? Now we have Solana and Ethereum, but now we have Circle Arc, Tempo, Tether Stable. Like, we're building, now in 2025, these entities are coming out and saying, no, 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 I want to build a stablecoin chain, a corp chain. And that's fascinating from a historical technology perspective, because that is very different than before, right? We started closed corporate and we went open. Now we have open, and these guys in 2025 are trying to go closed corporate, and they're doing it because they think that stablecoins could be that big. That's a market signal I think I'm seeing there. So my takeaway is pay attention to stablecoins. The money in the United States is not good enough. We never got to FedNow. Now we're fixing it with stablecoins, but the implications of it could be absolutely massive, generally positive, but not necessarily all the way through. So I think it'll be a little bumpy if we don't get this credit transition right.
Pay attention to stablecoins. Thank you very much, Sebastian. We're running out of time.
All right.
Thanks, everyone.
All right, ladies and gentlemen, we're going to do a quick flip of stage, and then we'll be right back with you in about 30 seconds. Thank you.